In this video, we're going to talk a little bit about corn. Everybody's all excited about corn, looking at this trend that's been coming in here and looking and getting excited to take another long position in corn, looking for this thing to make a big rally. Now, that said, I want to throw in a little wrinkle in your ideas and your comments and your thoughts about corn, because this is where we start to calm down in corn. We don't get all excited. Now, there is some opportunity for a little excitement in corn if we can solve those trade deals with China, because China wants to buy some of our corn, but at this point, those don't look like there's much chance of happening anytime soon. If we look at this from a technical standpoint, you can see that the stochastics indicator is way down here in the oversold region, and so it's looking like everything is saying that we should see this thing come up. If we draw our trend lines in here very easily, we just draw that in there. You can see that we had the nice rally, we have the break. For every up, there's a down, here's a down, and now we're looking for the next break and a nice big uptrend, right? So all signs point to a nice big rebound or a big retracement in here. And so everybody's looking to go long corn, and crossing over those blue lights would be our initial trigger, right? We haven't done that yet. And as we know, when we just think the market can't go any lower, it can go lower, and when we think it can't go any higher, it still goes higher. So we want to wait for the setup. We want to wait for the trigger. The setup is that long set of blue dots coming down here with the bulls and bears, and then crossing those blue dots would be the initial entry, and the confirmation would be the bulls and bears entry to the long position. Now, the problem with this is that everybody thinks that this market's going to turn and rally big, right? Well, let's look back in history and see what markets do around December. Okay, first thing we want to do is we just want to pull up seasonals, and seasonally speaking, over the last 10 to 15 years, yep, sure enough, right around this time frame, markets have a tendency to rally. Okay, now remember, this is based on a 0 to 100 scale. This is not price. This is just trend. So the general trend will be anticipated to be somewhat of a, kind of a bullish run over the next, 3 months, it looks like, all the way into expiration. I don't think we're going to get this huge run right up in here. I don't think we're going to get a big rally and a break and a big exciting jump and run way up into higher prices like it would be fun to see if we were coming in here at the Fibonacci projection 1, 2, 3 ABC, and if this were that breaking point right in here, you would anticipate a rise in price based on the previous model, right? But I'm not going to anticipate that, because let's again slide back in time. Now this is December 2019, so let's just go back to December of 2018, and it's still on the same chart. We come back here to December 2018. Look what the market does around December in this trend, November, December. Now, of course, this is the March contract that we're looking at, but overall the trend of corn is generally pretty darn sideways during this entire time of the year. And the reason is because we've got a known crop, right? This crop has been harvested, and it's pretty much all in the bins, and we pretty much know how much corn we have, and so there's not a lot of excitement that starts moving the corn around. It's not until May, June time frame when the market starts to get excited about planting and harvesting and getting the crop in the field that this market has a tendency to rally and run. So anticipating that this market's going to have another great big run in here is not something that I'm too excited about doing, unless we get some politics to come in here and push some of these prices higher. Now, we come in here, one more thing I want to point out is that if we come in with our chart overlay, we're going to do the historical averages. You can see, historically speaking, that this market hasn't really had a big run over the last, and let's look and see what we've got this set to. I've got it set to 1 and 3. So what did this thing do last year? Last year is the dark blue line, and I'll make that a little lighter so you can see it. So that light line, where I'm at, might be a little bit too light so you can't tell the difference between the two. There we go. So that light blue line, that's last year's prices. Okay, so 1 year average is just last year's prices. So this is what last year's prices did. You can see it had basically the same trend, rallied up during the same time frame, kind of came back down during the same time frame. We had a little bit of a run right here in November, and that's kind of what we're looking for, a little break of this blue light. So we're not looking for any lower prices. We are looking for a little bit of a run up in here, but nothing too exciting. And then last year it kind of just drifted lower all the way into expiration. And then this is a 3-year average, and let's take that weight off. And this is the 3-year average, and you can see it just kind of drifted sideways as well. Now, it over the 3-year average had a little bit more of a bullish trend coming in here. Not much, though. Didn't get all excited like it did back here in the middle of the summertime. And then last year's prices, it kind of just drifted a little bit lower. I don't think we're going to get this great big run right in here that everybody's all excited about. So everybody looks at this and says, well, what do we do then? I guess we don't trade this. If a market's going sideways, how do we trade it? Well, you can make money when a market goes sideways with options by selling them. So we can sell some premium down here, and if you are in my advanced options class, then you know that you can sell options and collect premium while markets just drift sideways and let time decay in your favor. We can put on either a strangle or a straddle. We can sell a strangle or sell a straddle, or we can sell an iron butterfly or an iron condor. So those are some of the option strategies that we have available to us as markets just drift sideways into expiration and don't have a lot of big moves in there, and we can just collect premium as the market moves sideways. All right, guys, that's just a quick update on corn and some strategies that you might want to consider. If you're not familiar with all these option strategies, contact me, let me know, and we'll get you into the options course online, and we'll help you make that happen for yourself.